So it was a strong show by Eicher Motors in Q2 where the numbers were above the consensus estimates, and post the numbers a very positive commentary being shared by the management of the company. As an impact of that, we are seeing quite a substantial gain in the stock price of Eicher Motors, and not only that, post the numbers, it did get a thumbs up from all the brokerage firms. So let me first highlight the numbers for Eicher Motors and how was the performance in Q2. So a revenue jump of 5.5% was seen. EBITDA growth was just flat on a YY basis. EBITDA number was recorded at 470 crores, which was above the consensus estimates and also the 80 Now poll. Talking of margins, 80 Now poll was to be estimated at 18.3%, but company reported EBITDA margin of close to 21%. Very good number over there, and in the bottom line, a jump of 8.5% was seen. In the numbers, the employee benefit expense was down to 16% on a YY basis, which did impact the numbers, and even the tax expense was lower on a YY basis. So both of these numbers, the lower numbers did help the overall headline numbers for the company. But apart from the headline numbers, the management commentary was also very positive, where they highlighted that they have a very strong order book. The semiconductor shortage issue, which has been impacting the products of the company, is now seen to be improving towards the end of September 2021 and is expected to improve further in the second half of the financial year. The revenue from the accessories has improved and has doubled on a YY basis, and its Make It Yours initiative has been doing really well for the company. They have been focusing on expanding their dealerships. They have been expanding not only in the domestic market but also in the international markets, and even the commercial vehicle segment that has seen quite a substantial improvement, and a recovery across the segment has been witnessed over them. So this was about the management commentary, but now talking about how the brokerages are seeing this. So Credit Suisse has maintained its outperform rating on the stock and has raised the target price from 3,020 rupees per share to 3,290 rupees per share. As per them, Q2 was definitely a beat. The production and the demand got a boost, and there is a margin upside going further. The optionality on the export and replacement was seen, and they expect the production to improve sequentially and reach the normal productions by Q4 of the current financial year. And even Morgan Stanley is quite positive on the stock. They have maintained their overweight rating for a target price of 3,366 rupees per share. The performance this time was aided by price hikes and higher realization and even the better product mix. They reported all-time high gross profit per unit by the company, but because of the deleveraging, there was a cap seen into the EBITDA per unit number for the company. They also expect the production figure to improve further, and sustainable improvement in the export is what they are expecting. And there is an upgrade coming in from JP Morgan, where from underperform rating earlier, they have now upgraded the rating and given it a neutral rating. And the target price has also been raised by 100 rupees, but it is less than the current market price because we have seen quite a good jump when the stock posts the numbers. And JP Morgan is valuing the company at 2,450 rupees per share of Eicher Motors. They say the margin surprise address one of their concerns. The mix and the price hikes drive surprise on the gross margins. They are still confident on the mix, but overall demand environment remains uncertain as per them. But they expect an improvement in the margin trajectory going forward. So this was about the Eicher Motors results. What is the management commentary and how the brokerages are seeing and targeting on the stock going ahead?